So here to join us with a little bit more on some perspective here in the sell-off, whether or not it's just a healthy pullback or more pressure here to accelerate to the downside. That's the big question investors want to know. And here to chat that is James Liu, Clearnomics founder and CEO. And James, good to be chatting with you again. I mean, this is the big question that we've been talking about, because a lot of these stocks that we think about when we think about tech, whether it be Apple, Amazon, had run up and enjoyed a pretty strong 2020. So what do you make of this? Is this just a healthy pullback here when we see the price reaction now?
Hey, Zach, good to be with you. That's right. I mean, tech names have been the high flyers throughout this crisis. And not only did they advance after the bottom of the market, but they accelerated into that advance. So you basically saw this parabolic move in those stock prices. And I think the point is that none of that is really sustainable. It doesn't necessarily imply that they have to pull back per se. It maybe they just kind of slow down or stall. But I think that was the unsustainable move that's caused us to be where we are today. And so if you take a look at tech stocks, a lot of folks are worried that maybe this is a 1990s, early 2000s style tech bubble, and a lot of comparisons are being drawn. I think it's quite different. I mean, this volatility is partly because those tech names are such a big part of the economy and the index today, which is very different from what we saw 20 years ago. And so a lot of the volatility we're seeing is also reflected by the concerns that people have about the overall economy, whether COVID-19 really is contained, whether there will be another wave of shutdowns, those sorts of problems. So overall, we think this is a healthy pullback. It's kind of a tricky term to use because, no pullback is ever it's not really something we want, but we do think that best describes where we are right now.
I mean, when we talk about the tech sector and the comparisons back to the tech bubble, I mean, you're right. A lot of people do bring that up. It's a healthy comparison, I guess, whenever there's panic specifically tied to tech stocks. But I would press that a little bit farther here, too, in terms of when you look back at valuations and where we're at and how far we got, because we've had a few guests on our show arguing the case that when you look at companies hitting this pandemic, there aren't a lot that can boast not just growth, but profitability through all this. And when you look at the tech sector, a lot of those big name tech stocks have done just that. So how much truth is there to the idea that maybe some of that valuation expansion is warranted here when we think about where is best to put cash right now?
Well, Zach, that's really the key question. So in the 90s, it's famously known that a lot of tech names, high-flying tech names, there wasn't a lot backing them up other than kind of hopes and dreams, essentially. And you look at where we are today, and the quote-unquote tech companies, which span many sectors, from information technology to consumer discretionary communication services, these are some of the fastest growing in terms of earnings across the S&P 500, of course, the NASDAQ, and many of these are in the Dow Jones. And so it's a very different type of scenario. And so it's not about a lack of fundamentals per se. Growth is there, earnings and profitability are there, profit margins in many cases are there. It's really what kind of multiples should we be putting on these companies this time around, especially at a time when traditional retailers, traditional service companies may not be able to justify those multiples in the wake of the economic crisis we've seen this year. So that's really the question. When you look at overall valuations, we are approaching for the S&P 500 where we were near the height of the tech bubble. So right now we're at 23 times. Back then we were around 25 times. So it is a little bit lofty, but we think those numbers will moderate as well as the economy recovers.
Yeah, and the other interesting thing, too, is we talk so much about the FANG names, and whether or not those are really what's driving the selling action we're seeing here. And you can talk about an Amazon, Facebook, Google, those bigger ones. But a new note from Credit Suisse is just kind of highlighting that those might be the tech stocks that come to mind when you think about the sector as a whole. But not one of those big FANG names even qualifies for the 100% return here year to date and above category. A lot of those names tied to more your cybersecurity companies there. As Zscaler, we've talked a lot about Zoom in the video communications sector. We've talked a lot about CrowdStrike, some of these other cybersecurity firms. But I mean, when we think about this rotation too, it's something that a lot of people talked about before we got here, and a lot of this selling in the tech sector had started, about relative value in cyclicals here and whether or not that rotation would start to take place here at some point in this recovery. What do you make about how that might be at play here, and the still, I guess, pretty significant amount of cash on the sidelines when you think about where we were back in February? Is about 2.8 trillion there to work with. Money on the sidelines barely budged now, down to about 4.5 trillion. back from 4.75 trillion. So what do you make of cash still sitting on the sidelines here, watching a little bit of this play out, and whether or not it's due to maybe, I guess, some of the tech fears and this rotation going on into cyclicals?
Yeah, I think that's right. So some of the rotation we're seeing, we still think it's going to happen in fits and starts. I mean, a lot of the rotation could be summarized. It's either cyclical versus defensive, or it's value versus growth. And you look at the spread between growth and value, and it's basically the widest it's ever been. Basically 8 multiple points, which is absolutely astounding. So, you take a look at that, and you take a look at what you point out, cash on the sidelines, which is basically a new constituency of investors coming in. And of course, they're going to be attracted to some of these high flying names. But really, the underlying question is, will the economy recover? Because if it does, then a lot of the profits growth from these companies will potentially be justified. And on top of that, you'll see those valuation levels being moderated over the next year or two as earnings recover. So to me, that's really still the key question. It's less about these short-term market dynamics, which are important, but longer term, whether or not this is sustainable is really whether or not the economy recovers and we can get back to an earnings number that we thought we would already be past at this point if it hadn't been for the crisis.
Well, yeah, when you think about the recovery, I mean, we got the jobs number last week, and kind of the thinking around where we are in terms of the unemployment rate recovering a lot faster than a lot of people expected. But when you think about what's ahead and how we might judge the next inning of this recovery, a lot obviously is going to be hinging on the election and what happens there. Interesting, from the UBS survey they just put out, looking at investors, talking about what they prefer in terms of how a Trump presidency might recover here versus a Biden presidency. And when you look at the economy there, it does seem that investors still give Trump the edge. However, when you think about managing COVID-19 and the risks we've seen on the pandemic front, investors seem to be giving Biden an edge. And I'd be curious to get your take on how those two things are linked, because we talk about this. We've heard that from Fed Chair Jay Powell, talking about how the underlying economic recovery is inherently linked back to what we're seeing on the pandemic front. So I guess it's kind of interesting here to see this bifurcation in terms of what investors are throwing their support behind, who they're throwing their support behind.
Yeah, I mean, it definitely seems the case that elections, not just who wins and who takes the White House and maybe Congress, but also the fact that there is an election that can often spook investors. And so what we often tell everyday investors is that, as citizens, as voters, as taxpayers, elections are incredibly important. But I think pretty much every economic forecast, every market forecaster has been wrong about every single election in modern history. So you look at Trump, everyone thought that with the Trump elected as an outsider, that basically tanked the economy and the stock market. And that's not really what's happened. In fact, the market made many new highs over the course of the last 4 years, earlier, the crisis earlier this year notwithstanding. And then you think about Obama in 2012 and 2008, that was certainly said about him, that Obamacare would tank the economy and the market. So I think a lot is put into these policy decisions, probably too much weight, rather than the overall economic cycle, which policy and the White House can influence through tax policy, through trade policy, but they really do not control. And, we're talking about tech stocks. It's like giving Bill Clinton all the credit for the tech boom and George W. Bush all the credit for the tech bust as soon as he took office. It just doesn't make that much sense. So overall, we think the election is very important, something to watch. It can cause volatility, but it's probably not the number one concern. The number one concern is still, can we get out of this crisis in economic terms and see that earnings recovery happen?
Yeah, and as you talk about, potentially a lot of room to run when you think about cash on the sidelines and that relative valuation split between growth names and value that we were just discussing. But James Liu, appreciate you taking the time to chat as always. Clearnomics founder and CEO. Thanks again.
Great, thanks, Zack.